All right, everything looking good. Time to get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday, March 23rd, 2022. And before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, we are looking good. Go ahead and jump right in. We are seeing quite a few targets getting hit left and right. Still got many in play. Got some open trades and basically just looking to see how these markets develop. Not looking to get too greedy, but at the same time, we don't want to cut our winners short either. I want to let them ride. But at the same time, we do need to remember that the majority of these assets are in fact in a bear market, and the bear market rallies are typically the most aggressive and then tend to trap the most people. And what we're seeing right now, a lot of the assets that we're seeing with these big moves are primarily, how do I want to phrase this? I guess retail names or meme stocks or, just trash in general. Companies that don't make money, that are decimated 50, 75+% down from their highs, having, reflex rallies. And it's very important that we remember too, if something drops down 50% from its all-time high, and then it has a 50% move back up from that low, it is still down 20%, 25% rather. So if something goes up to $100, you've got $100 worth of value invested in this asset. It then drops by 50%. That's going to take you down to $50 in value. And then if it goes up another 50%, 50% of $50 is $75. So you are still down substantially less. So if you lose 50% on a position, you need to make back 100% just to get back even. So that being said, let's jump in and take a look at what's happening in these markets. So we see the TNX hit our target up here to 2.40. And again, cycle highs. We know that obviously our breakout line was this resistance back here. And since then we have gone pretty much, straight up. We have our next Fibonacci level right up here at 2.566. We have the measured move of the cup and handle at 2.995. We have our previous all-time high before the dump at 3.255. And then we have various other measure moves for this massive head and shoulders pattern and our Fibonacci extensions up even higher than that. As far as I'm concerned right now, this is basically just reacting exactly as expected. Still very strong to the upside. We're not seeing any form of divergence or anything. We are well above the 200 exponential and simple. We consolidated for a while and we're losing strength right here. We then crossed the 200 exponential back above the 200 simple. Now we're just going parabolic to the upside, and I do expect that to continue. Just taking a quick look at the weekly chart, we see that we are well above the 200 exponential and simple. We crossed above the 200 exponential, crossed above 200 simple, came back down, retested them. What was resistance twice back here, then acted as support, and now we are off to the races. And when we just scroll back on the chart here, we see there's quite a bit of price action that took place over the last, 10 plus years in this area. But the higher we climb and the, more we kind of grind to the upside, the less of this consolidation that's going to be fighting us basically. So we see essentially we've already made it through these two big blocks of chop right here. And we made it through them pretty aggressively. So, once we get up to a next highest level, we have less and less price action taking place at those levels. And then eventually, if we get up here and we start to take out that previous high at the 3.24%, that's going to put us at a technical breakout. And again, just kind of looking at our chart right here, we know that a breakout above the level we're at right now is technically breaking out of our long-term trend, which now we've had happen previously. So we don't want to get too excited about it, but it's definitely looking pretty serious here on the yields. And the argument that, everything is already priced in, well, apparently it's not, because right now bonds are getting absolutely destroyed and yields are going parabolic. And, that's exactly what we've expected. So everything's working out the plan perfectly. 2.7% is our target to the upside for the monthly 200 exponential and simple. And we know this is only just begun. This is literally the beginning of a trend. And previously when we saw those trends happen, they led to long, consolidated, sustained moves to the upside. So right now, this is telling us, and now granted, don't get me wrong, we've had a powerful move, so it would not be unrealistic to think that we consolidate or even get a pullback from this level. But that's exactly what we want. We want to just keep marching up. A move to the upside, move to the downside, support. Move to the upside, move to the downside, support at our previous high. Move to the upside. When that's done, we want to come back down and find support around the 2.0 level. But now what we know that has happened multiple times is when we're moving to the upside, the 2 and the 10 and the various duration treasury bonds, or in this case, the yields have been moving around the same amount. So the spread has remained the same typically when we're going up. But when we pull back, the shorter duration bonds are pulling back less, or the yields are pulling back less, and the longer duration yields are pulling back more. So let's just look at our 210 chart real quick here. So obviously we know we have a long-term resistance that has just been hammering down the yields. And every time we cross up here, and now you can look at the cross a lot of different ways. I like to use the TJD master on the cross on either the monthly or the weekly. And you can see the recession happens right at the cross right here. The recession happens, basically the cross is in November. The recession is in March. And then here we see the cross happens right here in July. And then the recession technically begins in December. Here we see the cross actually happens slightly after the recession right here on the monthly. So you can use it on different time frames. I prefer the weekly for the actual cross of the 8 and 21 to determine trend. But now we need to pay attention to what's happened right here is we've had a couple times previously, we found resistance at the 200 exponential and simple. The previous peak in 2017, when we popped up before that recession, we actually made it above the 200 exponential and simple, but pretty much got rejected at the trend line. Here, we're already well above the 200 exponential and simple, and the trend line is only slightly above our heads. And we can see this is going absolutely parabolic. We have never seen this happen in history before, where the 10-year, 2-year spread, accelerated towards the 10-year like that. I mean, here we saw some pretty big chop right here, and then we saw a decent amount of acceleration towards the end of the trend. Here we see this going absolutely parabolic. I mean, this is a straight up line right now. That's straight up. So when people are like, oh, no signs of recession here. Economies are strong. Things are going great. I mean, they're obviously smoking rocks. They're smoking crack rocks. So when we look at this right here, we see the spread is 2.098 and 2.29. So the spread between the 2 in blue and the 10 in orange is literally at 20 basis points right now. And everybody's like, oh, it's already priced in, et cetera, et cetera. Sure, we'll see. I mean, we're going to find out real soon. There's no recessions. Well, we'll see real soon. You know what's going to end up happening is we're going to talk about this. We're going to be prepared for it. We're going to be positioned for it. And then about a year from now, everybody's going to be like, man, apparently we were wrong. It looks like we're actually already in a recession. That's so crazy because it looked like everything was so strong. Well, sure, it looks like it because everything lags. And if you don't, the thing about the Federal Reserve that's really been pissing me off lately, or over the last year or two, is they've constantly been saying, well, the data, this, that, we're going to do what the data says. We're going to follow, the data, blah, 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 blah. And then every time they get data, they try to invalidate the data and they say, well, we're pretty sure that this data's off and we think recession not likely and inflation's going to come back down. But we've got a feeling, we think, we hope, we're pretty sure, but they're not actually using the data. So what is the point on waiting for the data, for waiting for all these prints for unemployment or for CPI? Who gives a shit? If once it comes out, you're just going to say whatever and just stick with it. At some point in time, if you're the Federal Reserve, you want to gain credibility back. You got to come out and be like, look, I'm a little bitch and we're all stupid and we were wrong. We fucked up big time. Okay. But this time we're going to do something different and we're going to get it right. But they're not going to do that because they're little bitches. Powell is a little bitch. All those little Fed people that think they're so smart, they're all wrong as fuck. I mean, we were talking about supply chain constraints 2 years ago? And now here we are. I mean, I didn't expect it to last this long. But we literally been talking about it for 2 years and said the supply chain is broken. It's never going to be fixed. Deglobalization or nationalization is going to stop the supply chains from ever being as efficient or, as clean and well flowing. And now here we are multiple years later, record inflation. You can say it's because of monetary creation or whatever. But if you go look at the chart for monetary creation or money supply or whatever you want to look at, United States or whatever, if you look at that chart, it just goes up and to the right, like pretty steady. Maybe we saw a little peak or whatever, but what is the real issue here? We haven't been creating money lately. So why is everything still going up? Well, supply chain. We still have horrible supply chain issues. Energy is spiking. Commodities are spiking because there's not enough of them. There's not all of a sudden some massive, huge demand for oil. The world doesn't just all of a sudden need a bunch more oil than it used to need before. We don't just all of a sudden need a bunch more food. Everybody's not eating twice as much. We're not just like, man, being locked in our homes for 2 years, I'm super hungry. Yeah, me too. We should go out and get 2 dinners each. Oh, let's go to the grocery store and we'll buy twice as much stuff while it's extra expensive because I'm hungry. What about you? Yeah, me too. Let's go spend all our money on food. No, you got to be a fucking moron to think that's why this is happening. This has nothing to do. I mean, I shouldn't say nothing, but there's 2 sides of the equation. There's supply and there's demand. And the equation has to balance out. And eventually a free market will balance that out on its own. So if there's too much supply and there's not enough demand, then what happens? Well, the prices come down until supply and demand balance back out again. Because when prices get cheaper, more people buy things. When prices get expensive, less people buy things. If you want to buy a gallon of gas and go drive around and it's $2, you're more likely to do it than if it's $1,000. If it was $1,000 for a gallon of gas, are you just going to get in your car and make pointless trips around? Are you going to drive around on Friday nights? No. And that's an extreme example, but that's my exact point. Planes aren't going to fly if jet fuel costs $100 a gallon, and they can't fill up the plane because they have to pass that down to consumers. So consumers aren't buying tickets. So now they have empty planes, and then gas is super expensive. So now they have to lose money every time they fly places. No, eventually you kill demand with lack of supply, and then they balance back out. And that's the point of a free market economy. So that's what needs to happen in the future. But the truth is, the supply chains are never going to be fixed because there's going to be nonstop issues, and people are never going to get so comfortable. I mean, think about how many decades it took for the world to get so comfortable, everybody trading with everybody, every country buying from every other country, so much manufacturing in the United States, for example. Now, granted, we've talked about this before and how we have to export production so that we can import goods so that we can export dollars. Because if we're the world reserve currency and we have all the dollars and we don't need to buy other people's stuff, there's no way for other people to get the dollars. So therefore they can't settle in dollars for like the various things they need to purchase. So it doesn't work. So we have to export our production. We have to move production of goods outside of our country. So now we have a service-based economy and we make almost nothing because we get them made cheaper other places because those companies are willing to do things we're not willing to do, whether it's, pay people less or slave labor or less regulations, whatever the reasoning is, doesn't matter. The fact of the matter is that we pay other people and they do things for cheaper so they can get our dollars so we can get their stuff so everybody is happy and it all works. But in the future, what's happening now is nationalization. We're bringing back manufacturing a little bit to the country, or at least talking about it, maybe, going back to being potentially energy efficient, possibly maybe we're going to use some of our farmland to create stuff again, instead of having subsidies for farmers not to create food so that, prices are higher, various different things like inefficiencies in our economy, whatever. So as we start to bring back, maybe we start making our own semiconductors, the Intel's building a factory, et cetera, et cetera. As we start doing that stuff, other countries start doing that as well. So they're less dependent on each other. So the supply chain is more resilient. So something like this doesn't happen in the future. We're sacrificing efficiency for resiliency. So if you're going to now not pay some slave in China to make your goods for you, and you're going to make them in the United States instead, where now everybody's getting paid $15 an hour because, of inflation or whatever you want to say the reason is, you think those goods are going to cost less? You think those services are going to cost less? Are they going to cost more? Or are they going to cost less? Well, they're going to cost more. Because if you have an American make something for $15 an hour versus a slave making it in another country for $1, a day, which one's going to cost more? I mean, the input cost of labor is going to make a huge difference. So even when you take into account the shipping like going down because now you don't have to ship it from another country, it's still in the end going to cost more. So I don't think goods and services is going to go down in price, even when we do fix supply chains. Not here, not anywhere. I mean, think about countries like China, as they start to break ties with other countries, let's say a lot of, the East and West start clashing heads, and then they're like, we're not going to trade with each other anymore. Fine. Well, China has a ton of manufacturing, way more manufacturing than it has people to buy its stuff. Because all of a sudden, a bunch of the demand goes away, but they still have all this production. So one of two things has to happen. They have to find somebody else to make up for all the demand that's missing, or they have to stop making as much stuff. So one way or another, they either find a ton of extra people to buy their stuff, and they're like, oh, thank God, we filled the gap. Or all of a sudden, they have to become more competitive so people buy their stuff, lower prices, they make less money. Or alternatively, they stop producing as much stuff. Therefore, their economy, their GDP takes a hit. So what about the United States? Well, we don't make any stuff. So if we're going to start making stuff, what happens then? Well, our GDP probably goes up because we start producing more stuff, creating more businesses, generating more income, more value, etc. So we start to transition a little bit away from a service economy and more towards a goods economy as we start actually manufacturing things, etc. And then we'll see shifts like that happening as, maybe China and India and Russia start teaming up, and then they're like buddy, and then they all work together with each other. And then maybe we see, United States and Canada and, Mexico and Europe all getting tight, and working more with each other. And then we're going to see like shifts happening. And then eventually in time, potentially a rift, as we're already seeing right now, between the global reserve currency and people that don't want to use it anymore. And that's good. No global reserve currency has ever lasted over time. Think about how many different times we've had we had the Great British Pound, was basically world reserve currency. And then, we had the dollar after that. Then we had and it was gold backed. Then it was just the dollar and it was the petrodollar. Now it's, basically like the euro dollar system. So we've had all these various iterations of world reserve currencies. None of them going to last forever. Not the dollar, not anyone. Like we're already on borrowed time since, Bretton Woods and since coming off the gold standard and all this stuff. So yeah, maybe it transitions one more time and it goes into a digital dollar, and then that lasts for a little while longer. Maybe the East and the West kind of have a divide like they, did 50 years ago or whatever, and they kind of do their own thing, and there's sort of like two main kind of powers in the world, the East and the West, and they're kind of button heads and they don't trade with each other, and they don't worry about each other's business anymore. I mean, is that good or bad? That's all up to you. But the fact of the matter is we're going in that direction, but it's going to take a long, long time to get into that direction. And what happens in the meantime, is probably not going to reflect those moves. So when we hear about these big moves and it's like, okay, now Saudi Arabia is going to start trading with Russia and China, and they're like, fuck the dollar. Well, right now, their currency is pegged to the dollar. And what we're going to start seeing is if these currencies, these countries start moving away from the dollar, what's going to happen is we're going to see massive amounts of volatility. The same way that we see if all of a sudden the United States cuts off Russia and says, hey, we're not going to trade with you anymore. And Russia's like, okay, F you. We're going to seize all your assets in our country. And then all of a sudden India and China are like, oh, we see some opportunity now. So maybe we're going to move in over here and take advantage of this opportunity. And then Europe and the United States is like, hey, that's effed up that you're teaming up with Russia. So now we're not going to do business with you either, China or India. And then they're like, oh man, that sucks. So now like we're going to see this shift kind of happening. And what's it going to lead to? It's going to lead to ridiculous amounts of volatility with everything going on. Because think about how many years, how many decades it took for the world to settle into this comfortable, just everybody sit back, everybody just outsource everything from somewhere else, and nobody needs to have any resiliency in their supply chains. We're just all about efficiency. We'll literally have something made in another country to save a couple pennies on a widget over doing it ourselves, stateside or whatever, countryside, whatever you want to call it. So we need to look at it as more of the broad brush of things and be more dynamic in the markets, because we can expect further volatility going into the future. But the truth is, when this all settles out and everything, we'll probably be in a better place. I mean, maybe not in the shorter term, maybe not in the midterm, but in the long term, or maybe not in the long term, but kind of in the midterm. I mean, we don't know how it's going to pan out. No one can see the future, and any monetary or fiscal policy can immediately shift everything. That's why we need to be dynamic in these markets and, understand when we have invalidation points in a theory, and then also obviously in, actual trades as well. But what we see taking place right now is, what is the bond market? Well, the bond is basically just, guaranteed dollars in the future for dollars now. So it's basically a loan. You loan the United States government or a company or, a different government money, and they say, okay, we're going to give you back that same money in whatever duration you pick, 10 years. And then along the way, we're going to pay you some, yield annually or semi-annually, whatever. And that's going to be enough to compensate you for any devaluation or risk that you're taking in this loan. The same way that a bank makes a loan to you, it's the same exact thing. So when we see the yield curve inverting like this, what is that telling us? It's telling us that people see the future as too risky, and even short term, if you can get a 2-year loan at 2% and you get a 10-year loan at 2.29%, are you going to, for that extra 0.29%, pay the price of 8 years worth of risk? I mean, probably not. So as we see all the duration, basically gets pushed towards the front end of the curve, and the long end flattens, and the yield curves actually flatten and then eventually invert. And what that means is it's uncertainty in the future, volatility into the future, so people don't want to take more risk. So in order for them to start taking risk again on longer time frames, they need to be compensated for it. So if I tell you, okay, for 10 years, you're going to loan me this money and you're going to get back 2.29%. And I'm like, I don't know. That doesn't seem that good. A lot could change, man. Things are getting crazy. You're like, well, what other options you got? And you're like, well, if you want to do a 2-year loan, I give you 2.09%. And then we could reevaluate. And then maybe you want to go 10 years after that. Maybe you want to throw a little fiver in there. Maybe we could just keep going by twofers. And you're like, okay, yeah, let's just go with the 2-year. And then we'll see what we want to do for the other 8 years once the 2 years up and see what the world looks like, etc. So that's the mentality that people are having right now. So if the rate on the long end of the curve starts to go up, if it goes from, say, 2.09 on the short end, and then all of a sudden the 10-year is up at 3%, then you're like, well, I get almost 50% more yield if I take a little extra risk. I'm still good. I'm going to wait it out 2 more years. And they're like, well, what about 3.5%? What about 4%? What about 5%? And then eventually we find that balance where people now can balance the risk of what's currently going on with the reward for that extra duration. And that's where the volatility gets crazy. And as we see continued volatility because of all this, geopolitical stuff going on, fiscal, monetary, global storms, whatever it is that you're afraid of, or whatever's giving risk, another Rona coming back around, whatever it is that's scaring people, over leveraged, whatever it is, doesn't matter what it is. But as soon as that perceived risk starts to either come down and things look stable again, which doesn't seem very likely going into the future. I don't see the world being more stable in a year or 2 years or 3 years, maybe in 5 or 7 or 10 or 25. I think, sure, yeah, it probably goes, back down to a little more normalization. But you think a year from now, it's going to be more normal or less normal? You think there's going to be more weird and crazy shit happening in a year or less? Because I would say more. I think we're going into a long period of volatility when shit's just going to get wild. So you would think, therefore, if someone's going to, invest over a longer period of time, that they're going to want to be compensated for it with a higher interest rate to make up for the increased volatility or risk or whatever you want to call it. So that's going to tell you that eventually, we'll see the risk curve, unflatten and steepen on the long end, as people will be willing to do that for a higher interest rate. But as long as we see what's happening now, where, we've already seen the 25 and the 30-year invert, and then we saw the 10 and the 5 have inverted now, and now we see the 2 and the 10 are about to invert now, and then after that it's like, oh, well, now look at the 3 and the 5 or the 3 and the 10, or eventually everything is inverted and nobody's taking any risk, dated out into the future, and that's obviously not sustainable. That's obviously not sustainable. So when we see this happening right here, we don't know exactly what's going to happen or when it's going to happen, but we know that historically, every single time this has happened, every time this flips over red and we go into, when we see this on the weekly, when we see the 200 exponential and simple cross and go to the downside, this is literally, we're already in a recession, and it's getting absolutely crushed. You know, I mean, look at each time these periods are happening. It's 2008, 2001, 1990. This was obviously a quick one right here because just crazy stuff happened. But when you line it up on the shorter time frame on the weekly versus the monthly, we see as soon as the 8 and the 21 cross right here, right afterwards, we get hit with the recession. Go back here. We can take a look. Same thing. We have the 8 and the 21 cross right here. It actually crosses back to the upside. And then right afterwards, we get hit with the recession. So we basically have like a little double top. Here, same thing. 8 and the 21 cross to the downside. Recession. Same thing. So that's a very clear indicator. When we see the 8 and 21 crossing the downside, we're probably very, very close to the recession. So we know they're right about to cross. So it doesn't mean all of a sudden we're just in a recession. It means that the probability of a recession goes to, 100% or 95% or 99% or 80%, whatever it is, it goes extremely, extremely high. And if we see a situation where we break out of this basically descending trend right here, essentially if we take out this previous high right here on the 2 or the 10, what does that tell us? It tells us we have a technical breakout and yields are probably going to go through the roof. So what would make yields go through the roof? Well, there's massive amounts of inflation and you're trying to fight that inflation, with either longer duration or Fed funds rate or, the market's pricing in basically, more risk or more reward being necessary to take that risk. So we know that the Fed is planning on having, rates at 2 point whatever by the end of the year, and then 3 point something% in the next year. Well, that's technical breakout. So the Fed is telling us right now, expect sometime late in this year or next year, we're going to have a technical breakout of this descending trend line that has been going on for the last 40 years. So expect rates at higher amounts. This was the peak, obviously. And before that, the last time we were at that level was in 2007. So expect rates higher than they've been since 2007, sometime, next year. The Fed is telling us that. And we know that the Fed's little bitches and they're slow at everything. So more likely than not, they're probably going to be wrong. So it's probably going to be worse than that. So maybe it's at the end of this year. Maybe the rates are going to be much higher. Maybe they're going to be back to where they were in 2000. We don't know what's going to happen with it. But what does that look like for risk on assets? What does that look like for housing? What does that look like for, foreign investments, United States investments, etc. I mean, we don't know. There's so many factors on all these things that we need to all legitimately, in my opinion, one of the best things that we can do is focus on what we know. So you have a specialty, something that you're good at, something that you know more about than me or probably most people. Whatever that is, that's where you should be focused. Whether it's your country, whether it's stocks, whether it's, a certain industry or a certain sector, whatever that is, that's where you should be focusing your energy on. And that way you can have more conviction in things. Because into the future, with excess volatility, it's going to require excess conviction. If everything is just going up all the time, you don't need any conviction. You can be betting all in on Dogecoin because who gives a shit? It goes up 23% every day. Oh, and Shiba Inu coin? Yeah, I'll throw some in there too. Who gives a fuck if it's a dog meme? I don't need any conviction for Shiba Inu when it's going up 12% every hour when I look at it. Who cares? But when there's volatility, when it's going up and down and people are getting shaken out left and right, that's when you really need the conviction. Now remember, none of this financial advice, I'm not your financial advisor, these markets are extremely volatile. Please do your own research and trade responsibly. What's going on, chat? Eli, good to see you, brother. Thumbs up to you as well. Christoph, good to see you as well. Clapping, that's what's up. Sotos, what's up, brother? Good to see you. Crypto Deli, China will fill the gap with India, turning from the U.S. markets, in my opinion. Yeah, on some stuff, for sure. They will definitely fill the gap on some things with India, for sure. But let me ask you this, though, Crypto Deli. Do you think that China was previously not making as many goods as it could have, and that there was a bunch of demand in India that China couldn't meet? Or do you think that there just wasn't demand in India for like the goods and things that China was able to provide? Because I would say that if there was demand there, that China would have been meeting it. So something needs to drum up excess demand from India all of a sudden, suddenly. So it's not like China and India weren't trading before. They were definitely trading before. It's not like China was not able to make the stuff fast enough. And it was, it was like, oh, there's a waiting line for all the stuff that you want, India. Sorry, you're going to have to wait till 2023 to get it. No, that's not the case. So the demand has to come from somewhere. So what was stopping India from having that demand? Did they not have the money? Did they not have the desire? Did they not have the need? So whatever that is, that has to develop. And it has to develop fast enough to fill the gap from the goods of all the stuff that the East was buying. So how much stuff was, the West was buying. So how much stuff was Europe buying from China? How much stuff was United States buying from China, Canada, Mexico, whoever? I mean, that's a lot of stuff. So if all of a sudden, it's not like Russia where it's like, oh man, we burned our bridges with Russia, so we're going to have to figure out where we're going to get, some oil and some wheat from, and then we'll be okay again. Which obviously those are very important things. But like, who's going to make all this stuff in the meantime? Who's China going to sell all that stuff that they were making in the meantime? Because sure, India might fill that gap in 2 years or 3 years or 5 years. The United States or Canada or whoever, they might build factories and start making their own stuff in 1 year or 2 years or 3 years or 5. But this is not stuff that's just going to happen overnight. I'm not, and who knows what's going to happen. Maybe tomorrow we wake up in the morning and Taiwan is under attack. We don't know. I don't know what the time frame on China is going to be. None of us do. So from that is then what, the countdown? Then it's like, oh yeah, now Russia and China are buddy-buddy, and now Europe is going to come at China and sanction them, and then the U.S. is going to get on the side with Europe because, there's so many different things going on, and none of this is going to happen fast. Matter of fact, things are happening much faster than they've ever happened in history. Literally, like, it's like that old saying, like sometimes decades go by and nothing happens, and sometimes decades happen in a matter of days. And that's kind of where we're at now. That's a horrible misquote, but you get my point is things are changing extremely fast. So you have to be extremely dynamic in these markets. But yeah, I totally agree. I think India is going into the future. Obviously, it's risky right now and everything, but I think India is probably going to be one of the best emerging market, investments that you can have. Because how much copper is India going to need if it decides, it's going to have a bunch of electricity and, a bunch of, water and all kinds of infrastructure built, and how much concrete is it going to need, and what type of carbon capture is going to take place, and, what type of manufacturing are they going to build? And there's a ton of potential for these countries, but what's the time frame looking like, and how risky is that bet going to be? We don't really know right now. How risky is a bet in China right now? What happens right now if you decide, oh man, Chinese stocks are going crazy, this is great, I'm going to invest in these Chinese stocks, and then all of a sudden China attacks Taiwan, and then United States or Europe or whoever just delists all the Chinese stocks? Or maybe they don't delist the Chinese stocks, and then you say, oh man, I'm going to cash out of this Chinese stock that I have, and China says, oh yeah, actually that you don't own anything, that was a share we sold you in a shell company that's registered in the Virgin Islands or in Cayman Islands, and it actually, you don't have a stake on anything the way that you thought you did. Sorry about your luck. Because, that's the truth. It's the same way somebody was asking about, the U.S. basically saying we're not going to pay China on our bonds. Well, I don't think that's likely to happen, because you lose all your credibility when you default on something. The same way that Russia doesn't necessarily want to default. China didn't want to default on the, property bonds and everything for, Evergrande. There's a lot of stuff going on here. And, people think China is stronger than it is. A ridiculous amount of China's wealth is tied up inside of their property market. A ridiculous amount of Chinese people wealth is tied up inside the property market as well. And most of that property market is like shells of buildings and stuff that you can't actually live in. They don't have, elevators or running water or electricity. They're just built and sitting there because that's just where you're supposed to invest, because they don't like speculation in the actual stock market, the same way that we like it here in the United States. So there's a bunch of dynamics here, and the truth is a lot of them are going to change, and probably not for the better going into the future. So it becomes less and less safe, or you need to get rewarded a lot more to take some of these riskier bets and make it worth it, whether it's a bond or whether it's an investment in China or Russia or whatever the situation is. So there's a lot going on here. So oil, we see, obviously had a pretty ridiculous peak. A V top or blow off top, and then, what looks like a V bottom so far. What we need to pay attention to is, does this come up here and take out the high and just keep ripping, or does it put in a lower high and then come back down? It could go either way. I'm inclined to think that we will probably have people getting out of positions as we approach the top again and then reevaluating. We have reclaimed the slope line here on the daily, which looks good. We did avert the cross right here from happening on the 821, which looks good. The blue Stoch is then go back to the upside and looks like it's going to try to cross back up here. So overall, oil still looks strong. Now, there's probably a lot of people that are trapped right here that are like, let me just get out of this position, that I was upside down in or that I FOMO'd into, and then let's see where this comes out at. But, you guys know how I feel about energy. Probably going to keep strengthening going into the future. So the VIX, obviously we had a technical breakout. We came back down to our support level. We're at the 200 exponential and simple moving average. We're at our ascending support and near the bottom of the ascending channel. And then also we're at the descending breakout level in yellow. What was resistance now acting basically as, well, kind of support, kind of resistance. We're basically at that level now. I do expect this to hold and volatility to go up into the future. Bears are clearly in control. We are down here at levels where we tend to see the VIX bottom, while we're also at support levels. The last 3 bottoms happened from around this level on the TJD TDMACD. So that tells me that we're probably close to bottoming on this thing, and then also at support. I expect volatility to go through the roof once again and probably put in a new high. So Dow Jones, what happened with Dow Jones? Okay, so we came all the way back up to the top of the channel, all the way back up to our green support that's now acting as resistance, all the way back up to 200 exponential, the 200 simple, and the ascending red resistance. If you didn't check out the last stream and look at that detailed breakdown I did on the Dow Jones, highly recommend you go do it. But what happened? We went exactly back to the level we said. We had the exact reversion to the mean play that we were expecting. How long has this red box been in here? For a couple, a week and some change? So we got the move, and now the move is over. But who's in these positions right now? Is this smart money? Or is this retail? Is this FOMO? Or is this sustained moves to the upside? Is this options? Or is this people buying stocks? I mean, in my opinion, the same people that got double top dumped on or dunked on or whatever right here, hedge funds, retail, dumb money, whatever you want to call it, the same people that got dunked on right there and the same people that got dunked on right there, probably, in my opinion, the same people getting dunked on right here. Okay? And now we're seeing on the daily from this peak to this peak. I mean, this, it hasn't rolled over yet, but this is extremely high. That is much lower. We see on the knife, that one's pretty high. This one's extremely high. And now here we see on the, okay, if you're not familiar with the TJD TDMACD, it's a little different because it helps you with trend. But essentially, you can use a trough or a bottom peak and a top peak, obviously, standard. But you can also use a peak like this, where even though it doesn't cross above the 0 line, it's still a peak. So we see this peak right here. Just think about the negative space instead of the histogram. Here we have a big peak in negative space. Here we have a big peak in the histogram. So from this peak right here to this peak right here, this one is much higher. This one is much lower. And that corresponds with our points. So here we see, once again, bearish divergence taking place between our 2 points right here at resistance, at moving average resistance. So the likelihood is the VIX is probably bottoming. The stock market is probably topping. Now, can random, shit stocks or random sectors or whatever keep pumping? Sure. I'm talking about, I use the Dow Jones as basically just an overall, hey, this is what's happening in the stock market on the important shit. And then all of the other stuff, the Dow Jones is basically, it's like a killer whale, okay? The Dow Jones is a killer whale. It's swimming around, it's doing its thing, it's doing whatever the hell it wants, okay? And then, the S&P or maybe the Nasdaq, they're like the sharks that are swimming around too. That are like, okay, we're minding our own business. If the whale decides it wants to eat us, it can. If the killer whale wants to just murder all these sharks, it can. Because it's the king shit. But in the meantime, it just kind of does its own thing. And then all these little bullshit stocks and everything like that, they're little guppies. They're just getting snacked up every once in a while. Most of them don't even last for a couple years, whatever. But the main indexes are like the apex predators of the ocean. But in the end, if the Dow Jones, if the killer whale decides it wants to go ape shit and just start biting sharks in half, it can. Because it's where all the money's at. It's the charge of everything in the markets. And that's why I focus so much on the Dow. Now, the S&P is important too, but it will tend to have more, aggressive moves to the downside and to the upside, and sometimes kind of do its own thing. But keep in mind, at any point in time, the killer whale can just come in here and just bite this shark in half. So here we topped out slightly higher. We made it a little bit higher But we're seeing the same thing happen. We're seeing that bearish divergence taking place. We have a much lower high right here and a much higher high right here. Now, could this just keep going to the upside? And then also price action just keeps going to the upside and invalidates that bearish divergence? 100%. But to me, this looks like it's going to be another rejection. That's my honest opinion. I could be wrong. We'll know soon enough. But we're trying right now to reclaim the 200 exponential and simple. So now let's look at the Nasdaq. What's the Nasdaq look like? It looks like a shit version of those two. The Dow Jones trading extremely technically. The S&P is getting a little wild, jumping up above the 200 exponential and simple, trying to act like it's ready to do something. The Nasdaq is acting like a little bitch. Okay, it's a little guppy swimming around like, hey, you know, please don't eat me. But the Nasdaq is shit. It's garbage. It's trash. It's still in a bear market. The other ones have at least, I mean, look at the S&P. It at least tried to reclaim. The 200 exponential it reclaimed. 200 simple it almost reclaimed. This at least stopped from going into a bear market. Dow Jones at least pushed all the way back up and tagged the 200 simple, even though it's still technically in a bear market. But when we look at the Nasdaq, this thing looks like a steaming hot pile of shit. It broke down from a key level, red support right here. Now it's acting as resistance. Got rejected exactly at our red box, like the piece of trash that it is, the garbage tech company. The only reason it even moved up this much is because people FOMOed back into these trash companies that make no money because they were just so beat down, so down. I mean, these things are like down 75%, 50%, 90%. And people are like, it's in deep value territory, but it's trash. You're like, oh, it's so cheap right now. You're like, yeah, somebody else had a bunch of trash and threw it away in the garbage. And then you found it and you're like, oh, look at this free stuff. And it's like, well, yeah, but it's still trash. It's companies that don't make money. I mean, not all of it, but you know, a lot of it. So sure, you can have a nice 10, 20, 30, 50% bounce in something. But when it's all said and done, are you still holding somebody's half-eaten sandwich that, you know, they like licked the pickle and put it back in and then threw it in the trash? Or are you holding something that's actually good? Because that's the real question with these tech companies. And you know what I say, if it don't make money, it don't make sense. In my opinion, right now, I want to own real shit and I want to own real companies that make money. I don't want to own, you know, bullshit cryptocurrencies or companies that have promises of future earnings but are bleeding billions of dollars every quarter. No, thank you. Hard pass. Thank you, but no thank you. Actually, it's an easy pass, but a hard pass. So right now, Nasdaq looks like trash. Couldn't even get back up to 200 exponential. Couldn't even get back up to 200 simple. Getting hard rejected at our, you know, area we expected. So sure, it's building some momentum, but it's also building bearish divergence and couldn't get back above that level. Could it break through that level and just go parabolic? And next thing you know, Tesla's at 1,300, 1,500, you know, Nasdaq's going through the roof. Everybody's just getting rich and it's back, bull market back on. Sure, it could totally happen. But in order for that to ever happen, we have to reclaim the 200 exponential and simple. So now let's look at the Russell, small caps. Everybody's like, small caps are going to outperform this, that, and the other. Okay, well, let's look at the chart. Does it look like small caps are outperforming or does it look like they're trash? To me, it looks like trash. It looks like total trash. If you want to own an index right now, if I want to own an index right now, I'm buying Dow Jones or S&P. I'm not looking for deep value territory on the Russell. I mean, how many small businesses closed down in the last few years? How many of these companies are not profitable that are in, you know, the Nasdaq or the Russell? How many of these zombies do we want to participate in? I don't want to buy into a company and then turns out that the only reason that they even still exist as a company and didn't get liquidated or bought out by someone else is because interest rates have been at zero or negative real rates for the last, you know, decade. And that otherwise, I mean, the way I look at the Russell is like that person you used to work with who's clearly living above their means. And the only way that they can continue to drive that car or live in that house or eat out or party or whatever it is that they spend their money on, the only way they're able to do that is by constantly just putting more money on their credit cards. But they're not actually paying off their credit cards. They're just making the minimum payment. And then just slowly the debt's getting bigger and bigger. That's how I look at the Russell. And that's why I call them zombies. You know, most of them are, you know, basically taking out lines of credit or issuing stock or whatever the situation is just to pay, you know, what they need to pay. They're not actually profitable or they're not, you know, anymore, or, you know, they're using some favorable accounting, etc. But most of these companies are trash. And that being said, look at the chart. Does this look like a strong chart to you or does it look like a weak chart? Dow Jones got back up to 200 exponential and simple. S&P got above the 200 exponential and simple. How long has the Russell been in a bear market? When's the last time someone was profitable in the Russell? I mean, if you bought back in January of 2021, you're now dead even or down. If you bought anywhere in between there, you're down. If you bought back then, right after this little pump, you're at least dead even. Nasdaq's the same way. They're trash. They're in a bear market. This thing didn't even get back up to our key support line, or what would be resistance now. Didn't even get back up to the 200 exponential, let alone the 200 simple. It doesn't even know the 200 simple exists. It's so far away. Trash. That doesn't look like strong economy to me. People are like, oh yeah, it's all about the small caps. Okay, it's all about holding bags in the small caps. Is that what you're talking about? XLE energy sector looking pretty good, coming back up here. We got to see what happens here though. We got to look out for a lower high rejection. That's we really need to pay attention to that on oil and energy, because I'm not saying it has to happen. We could very easily continue to go higher. This is still strengthening. It's a strong trend, but let's keep in mind this thing has come far and fast. Now, you know, come summertime, I think energy is probably full on pushing again, but we're coming through the end of the winter into spring. And now there's kind of like this cooling off period for energy, you know, historically speaking. Transportation, you know, same thing. It was able to reclaim the 200 exponential and simple, but we should be seeing an aggressive breakout to the upside. Now it could find support here and then continue, and we get that big push up right here, but it doesn't look particularly great right now. I mean, we have basically a high right here, and then we have that same high right here, and look how much more energy it took to get to that level. I mean, this was our energy it took before. Not bad. Didn't even make it in the bullish control zone. Now look at this spike. I mean, you know, it's much, much higher inside the bullish control zone. And where are we at? Look at our little, you know, little humps right here. You know, this one didn't even get above the zero line. And this one is up here at 0.72, much higher, much higher. So if we roll over right here, we're going to see some very clear bearish divergence developing on these. And, you know, did we see a bunch of volume come in? Does this look like some super aggressive, you know, move and now we're ready to just go to new all-time highs? I don't think so. XLF, financial, back above, reclaiming 200 exponential and simple, you know, breaking back down, consolidating. We just had, you know, a few pretty aggressive days in these markets. And then 1, 2, 3, 4 days now we have wiped out just with that one little push down. So again, if we find support right here, we consolidate. Maybe the uptrend continues. Right now, it does not look particularly great. Oh, that was, did I say financial? I hope I did. XLC communication, again, had a nice bounce off of a technical area, had a push back up to a key descending trend line, got rejected exactly at the trend line, trying to cross the 821 back to the upside. If it consolidates here long enough, it probably breaks out and gets a move back up to 71.50. If it gets rejected and breaks back down below 67.21, probably goes down. We see momentum in its favor. We're pushing up pretty aggressively to the upside. But again, if this rolls over right here, it's going to look like massive bearish divergence. So to me, this looks like slinky theory in full effect. We go down, we go back up a little bit. We go down even more, we go back up a little bit. We go down again, we go back up a little bit. And then we go down again. That's what it looks like to me. Looks like we're going lower. I'm pretty sure there's more stairs. XLP, consumer staples in the house. Got a nice little pushback up here. Again, pushing back down to the 821, you know, averting the cross, or, I mean, we want that cross if we're bullish, obviously, on consumer staples. We were able to reclaim back above 200 exponential, bounced a key, you know, technical level of support, but we really need to get back above this descending trend line right here. Doesn't look particularly great. Long term, I think it holds value better than a lot of stuff. Utilities holding tight up here. Really, this is really looking like a bullish reset to me. I think this thing is just going to keep going sideways for a bit and then just have another move back up to upside. I think the indicator oscillators are coming down, and this is just going to keep going sideways and then get another burst. Real estate coming down. Obviously, we see issue with rates. We see issues with, I mean, I can't speak for all countries, but, you know, like we're having issues getting stuff still from supply chains. So, you know, home builders are not doing what they need to do. We're seeing people having difficulty getting, you know, mortgages or less mortgage applications coming in, because as rates rise, people are less likely to want to refinance, or they're less likely to be able to afford to or want to buy a home. Because, I mean, you're getting double fucked right now. You're buying houses at all-time highs with rates at, you know, multi-year, decade highs. So you're paying a ton up front for the house based on sticker price, and then you're putting a bunch down on it, and then you're also paying ridiculous, you know, rates on it as well. So it's pretty much, I mean, you know, it's like they say, higher prices cures higher prices. Eventually, it's going to come down. If the rates continue to rise, the valuations of houses are going to come down. And people are like, yeah, but everybody's going to buy them up, and it's the BlackRocks and the this and that. If you look at the percentages of people that are buying homes for like investments or, corporations that are buying homes, it's like not even, it's a fraction of the market. It's not even close to 50% of the market. I would go as far as to say, depending where you're at or, what area you're in, what country you're in, I would say it's not even 25% of the market. Maybe it is, maybe some places it's 33. But my point is that when it's all said and done, what the plebs are doing, what the regular people are doing, what the normal people are doing is what's making those markets, not what, some investment company is doing. And they're like, yeah, but the rents are rising faster than the home values, so it's still a good idea to buy a house. Yeah, okay, keep that one. Sure. I mean, unless you take into account the risk associated with it. Like, for instance, if you buy a house at all-time highs, at all-time high rates, and then all of a sudden we go into a recession and you lose your job and you get foreclosed on and you lose your down payment and you lose your house, and then you're like, yeah, that was definitely a better idea than just renting. Okay, sure. And that's like the mainstream media pushing this stuff right now. It's crazy. VWO, actually, it's not crazy. I mean, we know that the mainstream media, all they do is lie and, give you bad advice or bad information. VWO, emerging market ETF. Obviously, the China pump had this back at support. We really need to see. I mean, this is key level. I expect this to chop around in this level. If we lose this level, it probably revisits the lows and goes lower. If we're able to consolidate here long enough and we can reclaim the descending green trend line, I think we get a push back up to 50. Not going to be some massive move. I mean, it's like less than 10% from where we're at right now, but worth watching, obviously. DAX, Germany, obviously reached like peak fear there for a little bit and then had a nice little bounce. And then honestly, I think it just rolls right back over. We'll see what happens when it gets back down to 26. Nothing has changed with this. And, I think people don't realize. They're like, oh, yeah, no fly zone with Russia. Oh, yeah, everybody stop buying Russian fuel. Nobody wants your stuff, Russia. We hate you. Make sure that you understand what's really going on. Germany is still buying tons of fuel from Russia. Europe is still buying tons of fuel from Russia. Okay. United States, Biden sanctioned Russia. You're done, Russia. You're mean, and we're not going to deal with you anymore. Do you realize that there's a time like before that goes into effect? You realize there was I think it was like a 45-day time frame before it goes into effect where you're not allowed to buy fuel from Russia anymore because of the sanctions. So there's literally millions of gallons of barrels of fuel still coming from Russia. Some probably hasn't even left yet to the United States, to all these other countries. So everybody's like, oh, we need to fight Russia and Russia's so mean and we need to sanction them and we need to shoot down planes and this. Let's stop buying their oil first because we haven't even done that yet. So far, all we did was say, hey, we're going to stop buying your oil in 45 days. And we're on day 13. So keep it up. Well, let's just make sure that we understand that right now, the world is still 100% funding what Russia's doing. Whether you agree with it, whether you don't, whether you're on the side of Ukraine, whether you're on the side of Russia, none of that shit matters. The fact of the matter is, the world is literally paying Russia to attack Ukraine right now. So while we see virtue signaling and we see sanctions and we see calls for action and who cares and we need to stop jawboning and we need to shoot down planes and no fly zone. Well, let's stop funding them first. And this is just a general to the world. Let's all just stop paying for the bad man to do the bad things or else we really don't give a shit. We really don't give a shit. Because what if it was China? Is it like, oh, we're going to sanction China now, so now we're not going to buy any more goods from China? Good luck buying stuff and getting things. Okay. What are the prices going to look like if all of a sudden we can't get any of our shit from China? No matter where you live at, how much of the shit that you buy comes from China? Probably a lot. So if this was China doing this to Taiwan, is everybody saying the same thing? No fly zone. We need to defend Taiwan. We need to go to war with China. And just for perspective, I'm not saying that we shouldn't. I'm not saying that we should. I'm just saying for perspective, remember, it's easy to say when it's Russia. Are people going to be saying the same thing when it's Taiwan? Because, Germany was doing quite a bit of jawboning as well, and they're still fully getting all their energy and everything from Russia because they're not in a position to do anything different. So who has the power? Is it NATO or is it Russia? And you're like, yeah, but the military. Well, who has the nukes? Is it everybody? Well, I mean, I think Russia's got a straight royal flush right now, and the rest of the world doesn't have shit. They're all in on some twos, a pair of kings. Yeah, anyway. China looks weak. Got a pretty aggressive bounce right here, and it's basically just chopping around. We'll see what happens. I would think it's possible to get back up here to the version of the mean, especially with all the manipulation and everything going on, but I just don't know. And I don't like to use that term manipulation, obviously, but they blatantly have said, like, we're in this, we're buying stock in the open market. Alibaba is buying back billions of dollars worth of stock. Like, let's be real. CCP is not just not doing any of this. They're not forcing their hand, etc. So I would say that they're directly involved in it through their own admission. But we see a very clear resistance line here at 14,572. That's what we're paying attention to for the next level. We break above that, we get the 821 cross to the upside, consolidate there for a little bit, then we go up to 15,372. But again, the risk is higher than ever in China right now. Nothing has gotten better fundamentally in these markets. The charts look technically slightly better. UK 100, still looking okay for now, consolidating at these levels back above 200 exponential and simple. We really need to see what happens when this consolidates or comes down. What happens? Does it hold this ascending support in yellow, or does it lose it? Does it hold the 200 exponential and simple? Does it come down to it again? Does it find support sooner and then move? I'll be a lot more bullish on this after I see what happens on a retest to the downside. Because right now, it looks like, it looks like more bearish divergence getting ready to print. Looks like more bearish divergence, potentially on the TJD, TDMACD. And then EWZ, Brazil, reclaiming 200 exponential and simple, looks pretty good. Obviously made it through that key level. We do want to still see this thing come back down, because in order to get a nice little trade on this, we need to get it down from a lower level for the risk reward to be beneficial. Otherwise, we're better off letting it come back up here and then see what happens, and then potentially getting involved on, a momentum trade to the upside above the 200 exponential and simple. Right now, the way we look at this 200 exponential and simple is, I don't care if you're long on Brazil right now or short on Brazil right now. It's a coin toss. And the reason I say that is because it's fair value right now. We're at the 200 exponential and simple. And all that is taking the last 200, we're on the weekly time frame, taking the last 200 weeks on this, ETF basically, and saying, okay, is it a good deal right now or is it a bad deal right now? Well, we're at the 200 week moving average. So it's average. You're not getting a deal if you're short. You're not getting a deal if you're long. So it's basically a coin toss. Now, when we look at it from the daily perspective, the previous time we topped out was at this key level in red right here. We broke through the one that was holding us down right here, and we're back above 200 exponential and simple. So maybe we get that pushback up here, and then we find higher level of support, or find support at this, red level right here, and then we can take an aggressive move, to the upside. But really got to just let it play out a little bit. Got to wait for some development in some of these charts, because it really looks like we're seeing quite a bit of just basically dead cat bounces, in my opinion. So gold, aggressive moves to the upside, V top or blow off top, come back down, trying to save this 821, trying to move back to the upside. It was all red histograms, sell by sell, still well below the slope line. I think we push back up here again. Same thing with oil. We need to see, do we put in a lower high and then roll over, or do we find support and then go higher? We're going to know real soon. And then after that, we want to make sure we're on board for, the right end of that trade. Silver back down below resistance at the heart line of the channel right here. Again, lost the slope on the TJD, TDMACD. Still looks pretty weak on the daily. It's looking better because it's back above 200 exponential. It's back above 200 simple. Still, it's starting to flatten out here. So maybe arguably soon in the near future, we could say we're back into a bull market on silver. Gold silver ratio, again, just hanging out at those levels. We really on the weekly, which is what time frame we're on right now. We need to see something happen here. I don't like this though. I don't like that the histogram broke down below the slope line. We could easily still save it and save the trend, but it looks like silver is going to strengthen compared to gold, which tells me that probably what's going to happen here is we're probably going to have a breakout to the upside, and silver is going to outperform gold. Probably. Now, it's not for sure. That could easily change. THCX, all right, so this thing's just been getting hammered to the downside. I'm just using this as a proxy for pot stocks in general. Some look a little better, some look a little worse. We basically bounced damn near at the all-time low slightly above it. So this is like our last chance to not put in a new all-time low on this. We were able to cross 821 back to the upside, but I don't like it because of this right here. We did that once right here, and we got rocked. We also got a rejection candle as well, you know, a shooting star. We are above that 886 histogram, which is okay, but typically the way I look at the, not histogram, but Fibonacci, the way I look at the 886 is, the 886 is nice if we see an exact move to it, like a support or resistance at it, but if we move through it or even to it, it almost never saves us. You almost never bottom at the 886 or top at the 886. It's almost always just like that last line of support that tells you like, hey, if you don't want to be the one who has to buy the breakout, you might want to get involved. Now we do see 1, 2, 3 drives of bullish divergence, you know, with this peak, and then this lower one right here. We have this peak, this higher one, that higher one right there. So there's definitely an argument to be made that, you know, we should take a entry on this. And I've been talking to you guys about building positions in pot stocks, even if they do continue to put in new lows. They're just so beaten down and they've just been so wrecked for so long and everyone hates them that, I mean, it's hard to argue that you're not getting a decent deal. If you're intelligent about what you're buying and you do your research, you know, and look at, you know, what companies are trading at a discount, you know, of, you know, to book value right now. You know, is, you know, Aurora Cannabis trading at 50% of book value? Is Hexo trading at, you know, 30 to 50% of book value? Is Tilray trading at 30, 50% of book value? Do they have, you know, sales that are going up? Do they have revenues that are increasing? Are they profitable? You know, and you have to weigh all those things yourself, obviously. But if somebody told me, hey, do you want to buy this dollar? And I'm like, why would I buy $1 from you? And they're like, I'll give you a deal because I need money for that vending machine. And you're like, oh, okay, yeah, that makes sense. How much money do you want? How much change do you want for that dollar bill? And you say, well, the dollar bill, you know, reciprocal, the little thing that sucks in the dollar bill, and then you can buy your Cheetos or whatever. It doesn't work. So I'm willing to give you, I need 50 cents to get Cheetos, and I'm fiending hard for those Cheetos. Okay? So if you will give me 50 cents for this dollar, I can go buy my Cheetos. And you say, well, that's a great deal. I double up. Sure, I'll do that. Maybe it's 75 cents. And that's how I look at the discount of, you know, the net value or the book value of the assets that it has. You know, because say they, you know, say somebody does come in and buy them. Maybe they only buy them at 75%. Maybe they liquidate everything and just go out of business. Whatever it is, that margin, if you're buying something for 33 cents on the dollar or 50 cents on the dollar, you know, as long as everything's legit, there's no like funny bookkeeping going on, you're probably going to come out on top in the long run. Now, could you see some pain before then? Could it go down a little more? Sure. But it could have a bounce like Diddy as well, where it has one of those just rocket ships to the upside. So with a 12.5% stop loss, if we put in a new low, or maybe you just want to build a position, you're not looking at it as a trade, you're just going to start accumulating, dollar cost averaging into the downtrend, which normally I don't like to do, but when something's been getting beaten down for so long and it's hated for so long, if you have confidence in that space going into the future, do you think 5 years from now, 10 years from now, 20 years from now, that there's going to be more states or countries or, you know, with legalized marijuana or THC or CBD, you think there's going to be more people smoking pot or less people smoking pot? I mean, in my opinion, I would say that the people in charge have been clearly trying to like intoxicate, drug up the masses for some time. They're brainwashing them. They're prescribing them heavy drugs, amphetamines, you know, all kinds of different stuff. So do I think that they want more people high on weed and drunk on booze and, you know, effed up on prescription pills? More zombies? Or do I think they want less zombies going to the field? I would say probably more zombies. And I'm not saying if you do any of those things, you're a zombie. Just because you take 2 Xanaxes every day doesn't mean you're a zombie. Okay? It doesn't mean that for sure. But there's a higher likelihood if you're on heavy drugs that you're probably a zombie. A higher likelihood. Now, again, it might be, you know, 2 out of every 10 people on Xanax are actually just great people and super productive. But probably 8 of them are drinking wine in the middle of the day, taking Xanax and not taking care of their children. Just a guess, though. And again, nothing against Xanax, because maybe you're one of those too. But if you have a prescription for a hard drug, you're not far off of a crackhead. You know, the difference is you probably just like have a house and like, you know, a rich spouse or a good job where they don't mind if you're high on heavy drugs, which again, that's fine. There's lots of alcoholics out there. Everybody's got their vices. You know, maybe you spend a bunch of time looking at porn. Whatever it is, everybody's got their vices. That's okay. I'm just saying that into the future, do I think that the powers that be want more people on pot, more people on alcohol, more people on tobacco, more people on, you know, amphetamines, or less people? I would say more. So for me, might not be a bad investment, you know. And again, there's good things too. Like, I'm not saying pot is bad. If you have cancer, it's great for you. You know, if you like it because it helps you relax, but you're still a productive human being, it's good for you. If you like CBD because you have a bunch of seizures, and then if you take CBD, you don't, or you have a dog that has seizures, or a kid, I mean, there's a lot of good arguments for it. So again, I'm not trying to demonize drugs or vices or anything like that. I'm just saying, going into the future, it seems like there's a lot of motivation. Like, if I was going to try to drum up a bunch of voters, you know, for like the midterms, I would probably just be like, hey, yeah, we're going to legalize weed. Yeah, hooray, hooray. Everybody, you're going to all get a bag, and it's going to come in the mail. And because you don't need the mask and the test anymore, we're going to send you 3 joints, a blunt, and some brownies. And I mean, I could see them doing shit like that. So in my opinion, do I think this sector is going to be more or less valuable in the future? Well, it's already pretty beat down, so probably more. You know, and I would say, honestly, going into a potential recession or depression, more people are probably going to search out, you know, recreational and, you know, medicinal drugs. I mean, statistically, you know, how more people smoke weed, drink alcohol, smoke tobacco, you know, more people do recreational and, you know, quote unquote medicinal drugs when times are bad, to kind of drown out their pain, so to speak. And again, not hating on any of those people, not hating on anyone. I don't really smoke pot, but I have before. I don't really drink that much, but I do occasionally. You know, everybody's got their vices. Nothing wrong with them. Not trying to be mean or hate anyone, just trying to make a point here. So CCJ is next. Cameco put in the new high. That's a big move right there. You know, do we see continuation now, or is this going to be the push up and then it rolls over? I don't really see anything that tells me it's not going to be able to break through the Stochs here. But if we see this blue Stoch come up right here and then it rolls over, that's my sign to get out. So obviously I have taken some profits along the way on some of my uranium stocks. And I sort of wish I would, I mean, obviously, like now in hindsight, I wish I would have, you know, retooled up right here a little bit more, as we are up like 50% from there. But, you know, we took profits at a pretty nice area with this triple bearish divergence and this little wedge. So, you know, we're basically at the area we took profits at, which isn't bad, but definitely a missed opportunity to get back in, especially if these start running again. So I may have to just reevaluate, and I might not get the cheaper prices that I want, but I'm not going to be FOMOing back into these. And I do still have positions, obviously, in various uranium stocks, you know, UEC, URA, CCJ, all that good stuff. So copper hasn't quite gotten there yet, but just, you know, flirting with the highs here, hanging out. This is CPER, the index, U.S. Copper Index Fund. Looks okay. This probably does put in new highs. It looks like the 200 exponential is getting ready to cross above the 200 simple, which tells me this thing's going to start strengthening back to the upside once again. So copper and gold and silver look pretty good. Platinum looks terrible. I mean, it literally can't get out of its own way right here. It's shopping around between 200 exponential and simple. It's at pretty low levels, coming out of the bearish control zone. I think it probably does find support right here, hopefully. I wonder if it's time to just get back in a little bit of that platinum. Maybe. There's a lot of upside potential on platinum. Palladium obviously had that massive spike back down here, consolidating. 821 have crossed to the downside. It's above the 200 exponential and simple. 200 exponential has crossed over the 200 simple. This thing probably runs. I mean, maybe it comes down lower to 2280 first, you know, which is a decent drop. But this thing probably does run. The slope has flipped over bearish, and it's a bunch of red histograms in a row, still in the bearish control zone and below the 821. But I think, honestly, when it comes down here, if it comes down here to 200 exponential and simple, probably going to be a buying opportunity. Got to be real careful that it didn't put in a high, lower high, and then hit a neckline, and then put in a shoulder, and then roll over and sell down here. So this is a real sketchy time for a lot of this stuff right now. But honestly, the truth is, just with everything going on in the world, it's hard to picture a world where commodities still don't look good going into the future, because I think people are going to want like real assets. So DXY dollar looks strong, consolidating here still. You know, I really would like to see the dollar have a meaningful pullback down to like 97, 21 or something like that, because it's really not strong for this. It's not good for the world for the dollar to just keep going parabolic. There's a lot of people trapped in this, and we don't want to see like a short-term dollar short squeeze where this thing just goes nuts. It's not good, because this has been there's way too many people on the wrong side of this dollar trade for there to be stability. And I mean, I don't care. I'm on the right side of this dollar trade. You guys know that. So, you know, without being greedy for myself, am I going to benefit way more if the dollar just spikes through the roof right here? Sure. But I don't, you know, for like the world's sake, I don't think that's a good thing. You know, long term, I think it does keep chopping up here. You know, we hit a key level. We chop around here for a bit. We probably go higher. Yeah, I mean, we probably do. This just looks like another bullish reset. I mean, the dollar is strong. And I mean, you know, compared to Canada, compared to Europe, compared to UK, does the dollar get more strong or less strong going into the future? I would think, I mean, UK has Brexit going on. They have a little less issues with like Russia by geography, by like location. You know, Europe and the Euro, I mean, you're right next to everything going on here. Arguably, we're right next to Russia, but, you know, we got Alaska. So maybe Canada's in trouble. Maybe they come across, bridge the gap through Alaska. Maybe Russia takes Alaska back next. They're salty about that, like that little sale. Maybe they don't like it. They're like, hey, USA, we're taking back Alaska. I mean, we'll see. Anything could happen. It's crazy. But, you know, we've got Canada for the buffer up there. So we'll probably be all right. If you're in Alaska, I don't know, man. You might be in trouble, though. DXY looks strong. I mean, I think this thing just keeps ripping higher. Looks very strong. And then we go out to like the weekly and the monthly. It just looks, I mean, it looks stronger and stronger as the days go by, literally. I mean, the weekly looks very, very strong. We're running out of resistances up here, you know, before this thing just bursts. I mean, when this gets above 100, it's just going to rip, I think. Because 100 is probably like the line in the sand where it's like, okay, I was wrong. I was calling for 60 and it went to 100. I'm out. Not me. All the idiots. I mean, very strong. Look at the bullishness on this thing on the monthly chart. Absolutely. I mean, everything is postured to the upside and extremely bullish. Still have a little bit of overhead resistance here, but I mean, this looks like to me the beginning of a monthly, just absolute parabolic bull run in the dollar. No surprise, obviously. Tesla got the pushback up to 1,000. Could not hold above it. Fair rejection. I mean, this is options, obviously. That was our key resistance. Support right here, resistance right here. This thing probably goes lower. Does it go lower right away? I don't know. I mean, it looks like it probably does. This was a nice little run to the upside, but there's some options speculation slash, you know, big money moving Tesla to the outside. You know, and they got the new Gigafactory, and that's it. Baba, nice push up to the upside here. Or Baba, 821 have crossed back up. It still looks like it wants to come up here to 200 exponential and simple. If it gets above the 138 level, it probably rips. Does it get there? I think it probably comes back down first. Maybe 108. But I don't know. I mean, I really don't have an interest in Chinese stocks right now for anything but like a rampant speculation. Anything I put into China right now, I would just expect to go to zero. Definitely taking profits early and often. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Baidu already got the big move. Chops around here for a little bit and decides on direction. It's already ahead of the game, I think. Neo looks like it wants to push up here. Probably does get a pretty aggressive move. If it gets about 26, it probably does go up to like 31. But again, rampant speculation. And it's got some chop right here, but after that, I mean, 26 is the next level to watch, which is like 20+% higher. Diddy, a nice little move up here, trying to cross 821 back to the upside. Looks okay. Probably just going to consolidate here for a little bit and decide what's happening. If this level holds, it probably does just start chopping up higher. If it does not hold, I think we come back down here. I mean, there's a massive gap at like $2 now. RKK trying to cross 821 back to the upside. Same thing, looks okay. We had the bullish divergence, no secret here that we were expecting some kind of pop. I mean, obviously, we've hit all our targets on the 200 on the Dow Jones and S&P, and then something like this just looks like trash still. Doesn't mean it can't get up here though. Does not mean it can't go to 93. Maybe what price does ARK have to go back up to before CNBC will let Kathy back? Or are they just not letting her on because she was crying? SMH looks like it's getting rejected at 200 exponential and simple. If it consolidates here long enough, it probably does go higher. If it breaks back down, we want to see it put in a higher low. It's building up some momentum here. Does have some bullish divergence that's obviously playing out. We do have a series of lower highs. If it clears this level though, I can't help but be like more bullish, possibly even bullish again on semiconductors. Nvidia obviously looks much stronger. Came back up to that same level, 236, got rejected. Man, this semiconductor space just does not look great. Again, some bullish divergence developed here. Had a pretty aggressive move. Nvidia is one of the stronger players in the space. We'll see what happens. If it comes back down here and finds support around 240, it probably looks pretty juicy right now. This trade does not look like the one you want to be in right now, though. You do not want to see it pulling back like that. And the fact that it is pulling back tells us we could probably get a better entry price. And again, notice what's pumping, what the big moves were in. It's all retail stocks. All retail. Netflix, consolidating at that potential level. Holding support for now. Still a nice risk-reward ratio. Looks like it probably does go to 411. Bullish divergence and some clear resistance here. Obviously, you guys know Netflix is trash, but I mean, I don't hate it or anything. Apple, nice push up here. Looks okay. This looks much better than pretty much anything we've looked at today. Still well above 200 exponential and simple. 200 simple is crossing above 200 exponential. If this keeps pushing up right here, I mean, the new move is all-time highs. If it starts consolidating and breaks back down from this level, though, it's not going to look good. Microsoft, reclaiming 200 exponential, finding resistance 200 simple, running into that key resistance in green. If this goes any higher, it's pretty much invalidating any potential right shoulder action right here, which is fine. That's okay. We see some divergence, nice move at resistance. So again, we would just want to see where this consolidates for a little bit and then what happens. If we start seeing Microsoft and Apple and Google and Amazon, if we start seeing some of these ones look good again, it probably, starts to branch out into the overall market. If we start seeing weakness in these ones, it's going to be trouble. Amazon back retesting 200 exponential and simple. Here it almost had the 200 exponential. Here it got it, and now it got the 200 simple also. Consolidates here for a little bit. This should be a technical breakout of, like a W bottom right here. So we should see this have an aggressive move, at least back to the top of the channel, possibly even all-time highs. I don't love the setup right here, but it looks okay. Some bullish divergence, some momentum. I mean, it looks like it's going to have to cool down for a little bit before it gets any more positive momentum. And again, I'm not bullish on these markets right now. I am not bullish. In my opinion, this is literally the market makers, somebody throwing people a lifeline to de-risk on some of these positions before much lower prices. In my opinion, that's what I see. Google looks okay. Reclaiming 200 simple. 200 simple clearly above 200 exponential. Building some momentum. Looks all right. Is this going to get an aggressive move off of that W? Maybe. We'll see. I mean, if this puts in another lower high or like another third top right here, again, it's going to look real bad. All right, let's take a look at Crypto Connect. So Bitcoin futures, not much happening here. Still just getting our move back to the upside. Still have momentum in our favor on the daily futures chart. We have crossed back above the stochastic. Hard buy signal. We do have to be careful. This hard buy signal was a top and it rolled over. This hard buy signal was a top and it rolled over. This hard buy signal probably going to top right here again, theoretically. But we are putting in higher lows each time. We are putting in technically lower highs. So if we can take out the futures daily close at 44,195, it's going to look good. Now that is right at the 200 exponential, so it's not going to look that good. But a lot of times you hit your head, you hit your head, you hit your head, and you break through. So, and then, we expect it to come back down. So Bitcoin's starting to look decent, holding these levels. The longer it holds for, the better it looks. As long as it keeps putting in those higher lows, starting to look okay. Still very much in a bear market. Very much in a bear market, though. Don't want to get excited here. Spot chart on Bitstamp looks pretty much exactly the same. We see a little bit more inside the bullish control zone. 821 have crossed back to the upside. The 4 hour has reclaimed the 200 exponential on simple. So we're technically, and it happened basically right here, and now it's happening again right here. I have a small position on in Bitcoin right now, for now. Don't love this price action here. Don't love the way this looks, but as long as we're across to the upside on the 821 on the daily, it still looks okay. Still looks okay. If we lose this level of support, like 41.8, I'm just gonna take profits and get back out and then just see what happens. Because I don't want to, on a daily close, I don't want to see it lose this support right here, or this resistance, which now should be acting as support, or this basically resistance that should be acting as support. I don't want to see the 821 get lost again. I don't want to just see this do the same thing again. Still bearish, but I would say more like neutral bearish, short term, like slightly bullish because of the 4 hour. And again, if I'm looking at the 4 hour for positive signs, I'm looking at the 4 hour for negative signs. If we lose the 200 exponential on simple again, if we break down below 40,000 again, I don't want to be involved in Bitcoin anymore. For now. Ethereum. So we put this little trade setup last time. It's up a little bit since then. Not much has really happened on it. It's up a couple percent. Looks okay. Momentum in its favor. Bullish control zone. Smacking its head on the 200 exponential. Well, almost. Hasn't quite gotten there. 200 simple is still a little ways up here. So still looks okay. Like it gets there. Assuming nothing crazy happens. Bitcoin dominance rolling over a little bit. Is this going to cross back down? Come all the way back down to the bottom of the range? I don't think so. But if it does, maybe it invalidates and alts just go ripping and it breaks down from here. And this bullish divergence was just nothing and nobody cares. But it does have momentum in its favor. Very close to the bullish control zone. I think more likely than not, this is going to break down. Alts are going to run a little bit. And then it's going to get bought back up. And then ends up retesting the top of the channel. So nothing has changed. I think some temporary weakness on Bitcoin in relation to alts. Total market cap on the weekly. All right, so we close above the 8. That was our first step. We're at the 21. So if we close here at the 21, reclaim the 21, it's going to start looking much, much better. We're very close to a hard buy signal and a cross out of the bearish control zone. We're very close to 2 green weekly histograms. Starting to look okay. Crypto market cap, trying to reclaim that 2 trillion. Going to look better if it does on a weekly. Solana, 821 cross, at resistance. This is still a tough one. I guess realistically, man, there's just so much to fight for Solana. I think realistically, we got to look at like between 107 and 112. And then after that, we can start looking at like 145. Really want to see this reclaim the 382, chop around, and then we probably get an aggressive move. And that's probably going to be a buying opportunity. I don't like how some of these alts look, though, honestly. Even the ones that have decent setups, the charts look so terrible. And if I'm right about, sorry about that. If I'm right about the stock market rolling back over, crypto is about to just get wrecked again. Because keep in mind, all these cryptos are still trash. They're all still straight up trash. Nothing has changed. They didn't all of a sudden develop some new thing that's going to make them profitable. All of a sudden their white paper didn't come true. They're still just trash. 99% of them. Some are good. I just haven't found them yet, I guess. The ones that were good are now trash. The ones that were trash are still trash. And then there's a couple outliers out there. AVAX. But I'm not going to lie. This late in the cycle, I have no interest going out and looking for like the next big thing in crypto. Let's be real. Crypto is in a massive bubble. We could still go higher. It's possible. But the air is going to come out of these tires probably sooner than later. AVAX back at the 0.5, consolidating. Again, just kind of chopping around in this range right here. It probably does break down from here. It looks weak. Man. You know, and I think the problem is a lot of these like culty ones just overstayed their welcome. And now they're paying the price. And then other ones are kind of getting their turn. Matic has crossed 821 back to the upside. Next move bullishly. I mean, this looks okay now. You know, it looks okay. Next move up is probably like a $1.60 or so. I mean, this setup still looks all right. Bunch of green histograms, blue slope line, hard buy signal, bullish control zone. Still below 200 exponential and simple. If this thing can close back above a $1.72 and then start to consolidate, this probably goes much higher. You know, we're probably talking about at least like another 50-cent move on top of that. Luna. What is going on with Luna? I mean, it's up a little bit from that entry. Nothing crazy, though. At a key fib level, you guys know how I feel about the 886. Typically does not act as too much resistance. So this thing probably is going to all-time highs again. Looks like it's ready to move back up now. This looked like a bullish reset to me. So you guys know if this thing breaks out to the upside, I got some pretty heavy targets. This looks much better than 99% of the cryptos. Maybe more. Theta trade has gone pretty well so far, 33%. It's probably up at least 10 already since then. Consolidate around here for a little bit, and then honestly, it probably does have that burst to like 388. After that, it's going to be tough. There's a lot of resistance. 200 exponential and simple coming down. Looks okay. I mean, this thing looks kind of toppy right now. The knife stab up here tells me it probably has one more attempt to push up before it just gets wrecked. A lot of them look like that too. I wish that knife didn't come up as aggressive as it did, but it makes me think that, you know, the little pop has already happened and now these things are just going to start rolling over. So really got to watch these things on shorter time frames. And, you know, in my opinion, you guys know how I do it. At least the trade group does. Once I get into a trade and I get up a decent amount, I will almost always immediately, you know, a few percent, I will almost always immediately move my stop loss up to the next key support, which is usually my entry price. So at that point in time, if it comes back down, I just get stopped out and it's like I never took the trade. But there's no way I can take a loss. So I have all the upside potential, but none of the downside potential. And that to me, the free trade. And that's the best kind of trade you can take. One you're in with no risk. Flux is the last one for today. So at that entry point, looks okay. Again, I don't have any clue what this was. Somebody asked me to look at it. Hard buy signal, bunch of green histograms above the slope line, a little bit above the entry price. It's still pretty tight right now to move the stop loss up to the entry, but at least we can move it up to like, you know, that next point, which is the 200 exponential and simple on a close, and then tighten it up. So now it's a 6%. Now it's 5-to-1 risk reward ratio from the entry point instead of, you know, whatever it was, 3-to-1 or whatever. I can't remember what it was set at. It was a 13% stop loss and a 2.5-to-1 risk reward ratio. Now if we move this up above the 200 exponential and simple and then 0.236 on a close, not just on a little wick down there, you get wicked out and then it goes and you're like, oh man. Now it's up to, you know, basically a 5.48 risk reward ratio. And again, I would probably be taking some profits at a $1.71, but a $1.92 is really my target. So, but again, looks pretty good. I mean, looks like a technical breakout so far of that red resistance line. Found support back above 200 exponential and simple, just kind of creeping up. 821 crossing to the upside. Looks better than most cryptos. So, all right. Did we hit everything? Went pretty quick today. Let's see. We did a tangent / rant. We did the assets. We did the other assets. We did the cryptos. Nice. We did it. We did it. We made it to the end. What's up, peeps? I'm about to jump over here in chat, see what anybody's got to say. And then I guess we'll just call it there. I went pretty long the last couple of streams, so it'll be nice to have a short one. China will fill the gap with India. Okay, that was a while ago. I don't disagree with that, though, Delhi, by the way. Just it takes time. Arturo X says there are quite a few really good traders in India also. Like stock market traders, forex traders, crypto traders. I don't disagree. I think there's good traders everywhere, for sure. Soto said, I mean, there's a lot of like real smart, savvy people in India. Soto says, so hidden divergence works for MACD as well. It does, man. It does. It takes a little second to look at, but once it's like described, you're like, oh, that makes perfect sense. But it's just the way, I mean, it's the TD-MACD, the Trader's Dynamic MACD, all it does is kind of let you get a little more trend out of it and a little less oscillation. It still oscillates, but it allows you to identify trends more. And then the slope line makes it so you can like get more into like a swing trade or even a scalp or whatever, but identifies the actual trend of the MACD even while it's oscillating, which most things don't do. They just oscillate and then you have like an internal trend. This you're looking for. The TD MACD will have tons of divergence and tons of like trending slopes. And if you go back and look at, if you just bought every time, the TD MACD's slope turns blue and there's some divergence, you probably kill it. And if you just sell every time, you see bearish divergence and multiple red histograms on the TD MACD and break down below the slope line, come back up and then print bearish divergence, you'd do extremely well. I mean, it's a phenomenal indicator. Phenomenal indicator. The settings I use for it are weird, and people are like, why do you use those numbers? They don't make any sense. Literally, they just work so fucking good. I used to use different numbers on it, and it worked good. And then I kind of fine-tuned it a little bit, and the settings on it just work phenomenally well. And on like any asset, it's so weird. Any time frame, any asset, the TD MACD just absolutely crushes it. And that's free too. If you're out there and you're like, what's a TD MACD? It's down in the description. Go get it for free. Arturo X, yes, divergence work on a lot of oscillators, not all. Yeah, I mean, it's some it works better on, some it doesn't. Hidden, yep, correct. Christoph Kozlowski says Russia wants payment in rubles for oil and gas, not dollar and euro. Yeah, I mean, I think that's what we're going to see going into the future. I think that's 100% what we're going to see going into the future. It's the long-term de-dollarization of the world economy. And I mean, it's, in my opinion, it's a fact. It's just a matter of time before it happens. But the question is, does it happen over 2 years? No. Does it happen over 5? I mean, it starts to, but does it happen over 5 years? Well, there's a much higher probability. Does it happen over 10 years, 15 years, 25 years? I think the probability goes up exponentially to the dollar in its current form not being the world reserve currency. Now, let's keep in mind, we had gold-backed dollars. We had, the petrodollar. We had various forms of, the dollar as the world reserve currency. So it's had 2 or 3 different iterations of the dollar as the world reserve currency. So it's not to say that we don't get one more and that maybe instead of being the quote unquote world reserve currency, it's more of like an East and a West type thing. But I'm going to tell you right now, the volatility that happens between Russia and China and India and, whoever else ends up on that side of, assuming it breaks off into like, quote unquote East and West or 2 teams, the volatility on that side is going to be insane. Absolutely insane, and like, the Middle East, like there's a lot of crazy stuff going on over there. And like people always talk about, oh, the United States is world police and everything. Yeah. And they definitely step over the line for sure. But they also add a lot of stability to the world. A lot of people forget about, I'm not going to call out any specific religions or race or groups of people or anything, but a lot of people forget about some of the crazy ass shit that has happened over there that has been toned way down in the last couple decades, through like the strength of the West or the whatever you want to call it. You know what I mean? If you're afraid somebody's going to drone strike you, you're probably less likely to be doing like crazy shit. You know what I mean? But I mean, let's be real. As the West kind of pulls out and stuff, I mean, we just saw like, what was it? Like 75 people getting like mass executed, like beheaded in the Middle East. I mean, by the government. We're seeing obviously like, China full on like slave genocides taking place. Like, I mean, sure, the West is bad and they do a lot of scummy shit, but is the world more stable or less stable? Is there more volatility or less volatility? And that's how you have to look at it. There's obviously good and bad to everything. And in my opinion, going into the future, if we see this rift happen between the East and the West, or we see the United States or NATO or whatever starting to like lose some of their grip or dominance over some of these other countries, in the long term, it's probably going to be better eventually. But it's probably going to get a little crazy for a little bit as well. So what's up, honkiness? Bonjour to you as well, my friend. Qu'est-ce que tu vas faire? Oui, oui. Christoph, yeah, I did see that also, my friend. And I would expect to see more articles like that as well. But let's keep in mind that's going to be on a long, long time frame. We're talking like 5, 10, 15 years. I think we start to see digital currencies, Fed coins or whatever, way before that happens. Maybe we see every country has its own like Fed coin, or every, central bank has its own like digital currency, and then they kind of trade with each other in those digital currencies. Maybe there ends up being like some kind of agreement where there's a basket of all these digital currencies for the East or for the West or for everybody. Maybe it's all backed by gold. I don't know what the future looks like, honestly. Any one of those scenarios would not surprise me. Cool sheet. When Bitcoin dead, sir? I mean, it's starting to look a little bit better, but we'll see, man. I'm still not excited about it. We're still definitely in a bear market for sure. Below 200 exponential and simple. I do like that the 4-hour is confirming the 200 exponential and simple back in a bullish uptrend. Unfortunately, right now there's bearish divergence, and it looks like it's about to just melt down. But, we identified some key levels of support, and a breakdown below 40K is going to look really bad. And last one, Eli Karchov. Good to see you, brother. What is that? What are those names? Is that Polish and Russian? Kozlowski and Karchov? I'm probably saying it wrong, but I'm always curious where everybody's from. Appreciate the cannabis sector breakdown. Continuing to build positions, hoping big money will start to trickle into the sectors with growing revenue. Yeah, I totally agree, man. And I feel like if we're buying undervalued ones, like that vending machine example, and, coming into like midterms later in the year, I mean, we've still got a ways to go, don't get me wrong. And we probably go much lower still as these things continue to melt down. But, I mean, by the time we have a decent position built going into like, the second half of the year and going into midterms and, the world, just especially United States, Canada, etc., wanting to just dope everybody up and try to get as many slaves, I just don't see a world where pot stocks, where cannabis is not good. I honestly, if somebody was like, you can only invest in like a couple sectors going into the future, what are they going to be? I mean, I'm picking like energy. I'm picking like, drugs and alcohol. I mean, cannabis. I'm picking tobacco. I'm picking alcohol. And now the only problem with alcohol and cannabis is, you could technically like grow your own or make your own. So if things get really bad, maybe they don't do as well. As where energy, people are going to need that still regardless and going to have to buy it. So Eli says Russian. Okay, there you go. It sounds Russian. In the States since the early 90s, thankfully. Yeah, no doubt, man. I've got a lot of Russian friends. Where I live, there's like tons and tons of Russians. And then like I've got a good buddy who's married to Russian. It's crazy, man. It blows my mind because, a lot of people like forget how much of a melting pot the United States is. And when they start spewing all this, like this racist rhetoric all the time, or this like anti these people or those people or whatever, same thing happened with China. And like I have some, Chinese family members. I'm not Chinese, but like married in, and then I have cousins that are half Chinese and they have like, quarter Chinese kids. And like when I hear this like racism, it just blows my freaking mind. Now, fortunately, obviously the name is kind of a giveaway Russian wise, but fortunately, at least like if you have kids or, grandkids or whatever, they don't look so different that they're like going to be racially discriminated against in the same way as like, Asian kid or Middle Eastern kid or whatever. So that is definitely at least one benefit to it. But I hate to see this type of bullshit separatist like rhetoric, especially when it's like, oh, don't let, people from this race or ethnicity compete. And it's like, whoa, weren't we just all against racism and discrimination and everything? Isn't everybody like letting, I don't even want to get into it, but aren't we like not worried about BTQ, and now it's all about acceptance and you know, equity and equality and no more being mean to black people. But now we're going to hate Russian people. And a couple months ago, we hated Chinese people. And it's like, let's just be consistent. Let's just not hate whole groups of people in general. You know what I mean? Let's just hate people that suck and like people that are good, but on like an individual basis, not as like, you know, the broad thing. But anyway, I try not to be like too overly political or like religion or race based. But I mean, let's be real. It's not like I like hold my tongue on much on this channel. I'd like to let you guys know how I feel and be genuine about it. And I think most of you guys been around long enough to know that I've been on, you know, the receiving end of everything. I give it, I take it. It's okay. I don't mind, you know, talking a little bit of trash. I've had plenty of trash flying my way as well. I don't discriminate against any group of people. I think if you're a good quality person, it goes a long way, and that's much more important than, you know, your looks or your education or your sex or, you know, any of those determining factors. But that's what's up, man. Good stream today, guys. I think we're gonna go ahead and wrap it there. What are we at right now, time wise? I think we went pretty good. I mean, 9:42. Yes, we're right at about the 2-hour mark. So yeah, we'll go ahead and wrap it up there. I appreciate each and every one of you. Thank you to all the group members and showing your support. What else? We'll be back on Friday, 11 a.m. Eastern Standard Time for our Friday morning wrap up. And then, of course, next Sunday and every Wednesday as well, from 8 p.m. till 10 p.m. Eastern Standard Time. Keep in mind, obviously, there was a time change. So just make sure that you're, you know, in line with that. But that's it for today. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. It is Wednesday, 9:43 p.m. on March 23rd, 2022. Remember also, there's going to be some rebalancing taking place as well as we come up on the end of the month. So, you know, I will be doing some myself. And there's probably going to be quite a bit of volatility going into that rebalancing period also. So keep that in mind as well, guys. But that's it for today. Crypto Trend Trader, and I'm out of here.